Yes, very good morning. Right, so let's look into the amendments for RTP November 17 and say also a few amendments from RTP May 2017, yes, which get carried forward because not many questions were asked out of those amendments also. And in addition to that, we see a few important questions from some standards like 3420, 4410, 2400. Let us go through all of those. Okay. Right, so the first amendment in your RTP November 2017 is regarding an additional reporting to be done by the company auditor under section 143(3)(jd), which is regarding whether the company has made adequate disclosures of the specified banknotes between 8th November 2016 to 30th of December 2016. Right, so as an auditor, this is an additional matter of reporting. In case if you know, 143(3) is regarding duty as to reporting. Yes, in which there are 10 matters of reporting. Yes, information proper, branch books, AS adverse, directors maintenance, IFC and others. And in that others, you have 3 points over there. Already there were 3 points. Pending litigations, material foreseeable losses, delays in transferring amount to the Investor Education and Protection Fund, and now we have the 4th point over there, which is regarding the specified bank notes. Right, so what is the disclosure required to be given in the financial statements by the management for the specified bank notes? Closing balance as on 8th of November 2016. This has to be divided under 3 parts. One, the balance which they hold in those 1,000 and 500 rupees notes. That's the specified bank notes. Then the other denominations, yani ke 100 rupee notes, and the others which are allowed. Right? So that is the other denominations, the 50 rupees note or so. And then the total. Right. So first, closing balance as on 8th of November 2016. Then after that, add the permitted receipts, because if you remember, during that period, some entities, they were allowed to accept old currency. You understand, the demonetized currency like bank, hospital, government, statutory dues or so. Then there were also some payments which were permitted to be made. So less permitted payments. So add permitted receipts, less permitted payments. Then after that, balance deposited with the bank. Whatever remaining money you had in hand, that was to be deposited with the bank. So balance deposited in the bank. And then you have the closing balance as on, yes, 30th of December. So actually in the SBN, so this should come as blank, dash, no, nil. You understand? But you need to check whether there, yes, these are the disclosures for this SBN. Yes, 143(3)(jd). Okay, so closing balance, add permitted receipts, less permitted payments, and then the balance deposited, the money deposited into the bank, and then the closing balance. Right, as an auditor, you need to check what were the permitted payments done, the receipts made, the amount deposited into the bank. Yes, lot of backdating was happening, no? Like 8th November, this demonetization took place, and 5th of November, they were showing what you say, prepayment of the loan. They were showing that 10 crore ka FD is kept with the bank. Right, so as, and again multiple deposits, and then again who is depositing the money on your behalf. Right, so all that you can write over there in the audit procedures. Right, so that is one point regarding the specified bank notes under 143(3)(jd). Right, 143(3). Right, next after that, okay, we have the clarification from the institute saying that the old SA 700 series is applicable to your exams. So actually, if you look into your module also, the new standards have been put over there. And in the new standard, we have a new one also, 701. And so we have 700, 701, then 705 and 706. However, they have deferred the applicability of these new standards by 1 year. And that is why these new revised standards are not applicable for your exams. The old SA 700 series is applicable for your exams. Right, so SA 700, SA 705 and SA 706. Right, so SA 700, what is the title? forming an opinion and reporting on financial statements. 705, modifications to the opinion in the independent auditor's report. And 706, emphasis of matter paragraph and other matter paragraph in the independent auditor's report. Right, so quickly we will scan through these three standards, 700, 705 and 706. Yes, 700, it is divided under two parts, forming an opinion and then reporting. In order to form an opinion in accordance with SA 700, auditor, you need to check whether the overall objective of SA 200 has been achieved or not. For that, you need to check which is the AFRF, whether it is a compliance framework or whether it is a fair presentation framework. Right? If it is a compliance framework, you will express an opinion saying prepared. And if it's a fair presentation framework, you will express an opinion saying true and fair. See, even in May 17, they asked a question on the contents of the auditor's responsibility paragraph in the exam. So actually, it's been auditor's responsibility since a long time, no? Since the time we have the audit report. But why they are asking questions from the 700 series right now? Because it is under the sunset, no? It is about to go. There is a sunset and there is a sunrise. Okay, so what is about to go, they ask a question. And what has just come, again for those they may ask questions. Right, so now, when you have to form an opinion for a compliance framework, that means when you have to express an opinions on the financial statements, saying that they have been prepared by the management in accordance with an applicable financial reporting framework, you need to check for 6 points. Right, so compliance framework, yani कि say company has prepared financial statements as per Hong Kong GAAP. So for these Hong Kong GAAP financial statements, what opinion are you going to express? Prepared. So what are the 6 points which you need to check in financial statements? 1. All the accounting policies used by the management in the preparation of these financial statements, have they been adequately disclosed? So you go to the notes and check whether all accounting policies have been disclosed. Second, whether these accounting policies are consistent with the AFRF. Yani ki the as laid down in the standards, accounting standards. Third one, that all the accounting estimates which have been made by the management, whether those estimates are reasonable. And all the provisions, provision for tax, litigation, outstanding rent, yes, retirement benefits. Then the information given in the financial statements, is it RRCU? Relevant, reliable, comparable and understandable. Then the effect of material transactions and events, like what I call them as exceptional, unusual, non-recurring, extraordinary items, whether they have been adequately disclosed. And the terminology used in the preparation of financial statements, including the title of each financial statement, is it appropriate? Right, so the terminology used, like balance sheet, statement of profit and loss, profit before tax, profit after tax, what are all these terms used? Okay, so these are the 6 points which you need to check for when you have to form an opinion on a compliance framework, that is wherein you have to express an opinion saying prepared. Right. Fair presentation framework, will I check for these 6 points? Yes, because accounting standards, yes. In addition to that, I will have to check for Schedule 3. So one additional point over there in case of a fair presentation framework is that whether the structure presentation content, of the financial statements is such that it achieves a fair presentation, simple language, whether Schedule 3 has been complied with or not. So very much again, okay, there is no revision in this part as compared to the new standard. If you look into the new 700 series, these same 7 points are there for considerations for forming an opinion. But as they have not asked a question so far on what are the considerations for the auditor while forming an opinion on the financial statements for a compliance or a fair presentation framework, you may study this particular set of points and prepare for it. Right, so what are the points? Right, accounting policies, have they been adequately disclosed? Are they consistent with the AFRF? The estimates, are they reasonable? Information RRCU, material transactions, events adequately disclosed and terminology used appropriate. And SPC of financial statements is such that it achieves a fair presentation. Then in 700, I can talk to you about the contents of the audit report. Yes, starting with the title, which is Independent Auditor's Report. Then you have the addressee, depending upon the circumstances of the engagement. Then introductory paragraph, 5 points. Yes, in the exams, there could be question number 7, write short notes on introductory paragraph in the audit report. So introductory paragraph, name of entity, fact that the financial statements are being audited, title of each financial statement, the notes and the date or period covered. If you remember audit report opening sentence, we have audited the accompanying financial statements of ABC Company Limited. Right, so that is introductory paragraph, 5 points. Then management's responsibility. And wherein you can write down the preconditions of SA 210 or the contents of the DRS given in section 134 subsection 5. Because DRS is what? Director's responsibility statement. So that is nothing but management's responsibility, no? Right, so preparation, presentation of financial statements in accordance with AFRF, management, your responsibility. Design, implementation and maintenance of internal controls in the organization, management, your responsibility. Then auditor's responsibility paragraph, we have 7 points. Yes, auditor's responsibility paragraph. What are the 7 points over there? 1, our objective of audit is to express an opinion. Second, we have conducted our audit in accordance with the standards on auditing. Third, those standards require that we comply with the ethical requirements and obtain a reasonable assurance that financial statements are free from material misstatement. In an audit, we perform audit procedures to obtain audit evidence. In those procedures, we assess the risk of material misstatement and understand the internal controls. Then, we check for the appropriateness of accounting policies and reasonableness of accounting estimates and the overall presentation. And last point over there, we believe. And auditor's responsibility paragraph, last line, we believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our audit opinion. So this was the question asked in May 17, contents of the auditor's responsibility paragraph. Objective of audit, to express an opinion. Conducted our audit in accordance with the standards. Comply with ethical requirements. Obtain reasonable assurance. Perform audit procedures to obtain audit evidence. Assess RMM. Understand internal control. Appropriateness of accounting policies, reasonableness of accounting estimates and overall presentation. And last one, SAAE. What is SAAE? Sufficient appropriate audit evidence. Right, so title, addressee, introductory paragraph, तुम्हारा responsibility, हमारा responsibility. Management's responsibility, auditor's responsibility, opinion. Opinion 143 subsection 2. 1, whether the financial statements give the information required by the act in the manner so required, and second, whether they give a true and fair view. If it's a fair presentation framework, compliance framework, then prepared. true and fair view of the state of affairs, results and cash flows of the entity for the period ended on that date. Right, so title, addressee, introductory paragraph, tumhara, hamara, opinion, other reporting responsibilities. Yes, other reporting responsibilities. I just started with that today, 143 subsection 3. Whether he has obtained information and explanation which to the best of his knowledge and belief. Whether proper books of account as required by law. Okay, 143.3, looking from your face, I understand you've not yet learnt it, but very important. And 10 points of reporting under 143.3. And information, explanation, proper books of account, branch audit report, balance sheet and profit and loss account are in agreement with the books of account. Financial statements comply with the AS. Do you know that? Yes, then any observations or comments which have an adverse effect on the functioning of the company, any directors disqualified under 164.2, then maintenance of accounts, adequacy of IFC, internal financial controls, and then the such other matters as may be prescribed. We said no, these such other matters, last one over there. Okay, that's an addition, right? And then the report ends with signature, place and date. Signature with the firm's registration number, membership number, the place and the date. Place of signature and the date on which the report has been signed. After it has been approved by the management, the financial statements, and after the auditor has obtained sufficient appropriate audit evidence. Right, so once again, can you tell me the contents of the audit report? Title, addressee, introductory paragraph, tumhara, hamara. Management's responsibility, auditor's responsibility, opinion, other reporting responsibilities, and signature, place and date. Then as per SA 705, which is modifications to the opinion in the independent auditor's report. Okay, this standard you require at the end of every case study. The auditor shall request the amendments to the management, and if the management refuses, the auditor shall modify his opinion in accordance with SA 705. See, whenever you are given an audit circumstance and you find there is some error, there is some gadbad, what you say? You amend, request the amendments to the management. And if they refuse, then Sabka Malik 8 SA 705. And modifications to the opinion. So there are two reasons why an auditor may modify his opinion. One, there is a material misstatement. And a misstatement means what? Fraud or error. That means there is a material fraud or a material error. For this material fraud or error, you need to check its pervasiveness. Whether it is material but not pervasive, or whether it is material and pervasive. Whether it is material but not pervasive, or whether it is material and pervasive. Material misstatement, material but not pervasive, qualified opinion. Financial statements give a true and fair view except for the effect of. Okay, right. Material misstatement, material and pervasive, adverse opinion. Financial statements do not give a true and fair view. Okay, this is gone. Light geli ka? Okay, but you have the 2x2 matrix in your books. Okay, so let me continue. Okay, right. So one reason why the auditor may modify his opinion is material misstatement. You did the audit and you came to know a material fraud, material error. For that you need to check the pervasiveness. So if it is not pervasive, qualified. If it is pervasive, then adverse. And second one, there is a limitation on scope. That means you are unable to obtain sufficient appropriate audit evidence. For that, again, if it is material but not pervasive, you will issue a qualified opinion. Financial statements are true and fair except for the possible effect of, and unable to obtain sufficient appropriate audit evidence, which is material and pervasive, disclaimer of opinion. We are not in a position and we do not express an opinion on the financial statements. So, you know, little bit of predictions which I can do is like last exam they asked 700. Okay, so now if they want to continue to ask questions from the 700 series, they can ask you now from SE 705. But you as students don't do any such analysis, आप पूरा पढ़ाई करो, है ना? It's for you it is नेकी कर दरिया में डाल. You understand? You study the entire subject. You don't do any analysis. I'm sitting over here to do the analysis for you. You understand? Right. So 705, wherein there could be a question on circumstances in which an auditor could modify his opinion and what are the types of modified opinion. And at the May 17 exam, if you see, there is no case study, no audit procedures asked. What they did, more questions from the basics. Like as an auditor, how to reduce detection risk. What are the general steps for a risk-based audit? SA 530 audit sampling, they asked 13 marks. कैसे लॉटरी लग जाती है, बोलते हैं ना चांदी हो जाती है किसी की. यार 530 यार, मतलब it was nowhere in, मतलब इतना limelight में नहीं था, एकदम overnight star. You understand? So May 17 made it a star, no? Celebrity, overnight hit. Okay, उसका importance ही बढ़ गया है ना. Tolerable misstatement, tolerable rate of deviation, principles to be considered while designing and evaluating sample, and the sample selection methods. And 13 marks they asked from that particular standard. Right, so 705, modifications to the opinion in the independent auditor's report. है ना? Qualified, adverse, qualified, disclaimer. Then, how does the content of your audit report undergo a change in case of a modified opinion? Title, addressee. Introductory paragraph, तुम्हारा, हमारा. Management's responsibility, auditor's responsibility. Now immediately before the opinion paragraph, you will insert a new paragraph called as the basis for modified opinion. So it could be basis for qualified opinion, basis for adverse opinion, or basis for disclaimer of opinion. And now opinion paragraph heading will also change to modified opinion. So again it could be qualified opinion, adverse opinion, disclaimer of opinion. Right, so basis for modified, here you are going to give all the reasons. यानी कि all the material misstatements, all the limitations on scope, all the reasons, auditor, why you are modifying your opinion. Okay, inventory is overvalued, fixed assets information we did not get. So basis for modified, and then you issue a modified opinion, and then rest is same. And other reporting responsibilities, 143 subsection 3, and then you have the signature, place and date. Right, so that's the change which comes to the content of the audit report in case of a modified opinion. Then we have 706, emphasis of matter paragraph and other matter paragraph in the independent auditor's report. Yes, emphasis of matter and other matter paragraph in the independent auditor's report. Anything fundamental to the user's understanding, emphasis of matter. Anything relevant to the user's understanding, other matter paragraph. 4 features of emphasis of matter paragraph: location, then heading. Give what should be the heading of this para in the report. Third, clear reference as to where the related information can be found in the financial statements. And last one, without modification of opinion. Again, I very much expect a question in the exam on this, emphasis of matter paragraph. Yes, without modification of opinion. And other matter paragraph, 2 features. One, the location, and second, the heading. Yes, what is the location of emphasis of matter paragraph? Title, addressee, introductory paragraph, management's responsibility, auditor's responsibility, opinion. And if it is a modified opinion, then basis for modified opinion, then emphasis of matter paragraph, if any. So what is the location? Immediately after the opinion paragraph. Do you get that? Location immediately after the opinion paragraph. What should be the heading? Emphasis of matter. Third, you have to give a clear reference where the related information can be found in the financial statements. And by emphasizing this matter, say contingent liability in my audit report, have I modified my opinion for the same? No, it is without modification of opinion. So if I had to modify, I would have put it in the basis for modified opinion paragraph. I only want to emphasize. So location, heading, clear reference and without modification. Then other matter paragraph, what is the location? It says opinion, emphasis of matter paragraph if any, and then other matter. So pehle bada bhai, emphasis of matter, fir other matter. And then heading is other matter paragraph. And then again the original one, other reporting responsibilities, 143 subsection 3. And then you have the signature, place and date. Right, so that is SA 700, 705 and 706. Right, 700 forming an opinion and reporting, 705 modifications to the opinion, and 706 emphasis of matter paragraph and the other matter paragraph in the independent auditor's report. Okay, as I've come to the standards, let me finish the discussion with the standards itself. Okay, next one in your exams, rather in your RTP November 17. Now this is not an amendment, but there is a question asked on SRE 2400, engagements to review historical financial statements. Engagements to review, yes, historical financial statements. Yes, to first give you a briefing regarding what is the difference between an audit and a review. Audit more in scope, review less in scope as compared to an audit. In an audit, we give a reasonable assurance that financial statements are free from material misstatement. Whereas in a review, we give a limited assurance that financial statements are free from material misstatement. In an audit, there are mainly 7 methods of obtaining audit evidence: inspection, confirmation, analytical, inquiry, observation, recalculation, reperformance. Whereas in a review, there are mainly 2 methods of obtaining evidence: inquiry and analytical procedures. Okay, now the question which has been put in RTP November 2017. Okay, this has come as an amendment in May 17 RTP. 2400 has been revised. If you look at May 17 RTP, it says 2400 has been revised. And in November 17 RTP, they put a question on this. Okay, auditor or practitioner, when will you not accept a review engagement? Okay, the client is saying that chartered accountant, we want to appoint you to review our historical financial statements. And he says, no, I will not accept this engagement. And so considerations while accepting a review engagement. Considerations while accepting a review engagement. Yes, what does the practitioner say? I can't call him the auditor for 2400. It is the practitioner. So what does the practitioner say? He says, I am not satisfied. I am not satisfied. Okay, there is a rational purpose behind you getting a review. आप लोग क्यों review करवा के ले रहे हो मेरे समझ में नहीं आ रहा है. Practitioner is saying, मेरे को नहीं लग रहा है कि आप लोगों ने review करवा के लेना चाहिए. Okay, he is not satisfied कि review is appropriate in the circumstances. He says, आप लोगों ने, आप मतलब management, company, तुमने तो audit करवा के लेना चाहिए. तुम्हारे केस में review is not appropriate. Like I can tell you, ना नहीं तुमने तो full batch करना चाहिए. Revision is not appropriate. Okay, so review is not satisfied. There is no rational purpose. It says it's not appropriate. Then he says, I am not satisfied. You know, he says, this is the from client side, first 2 things. Next he says, I think I cannot comply with the ethical requirements including independence. You know ethical requirements, IOC, CPT. Integrity, objectivity, professional competence and due care, confidentiality, professional behavior, technical standards. He says, I am not satisfied that I can comply with the ethical requirements including independence. Then after that he says that I have doubts regarding management integrity. I have a doubt regarding the management integrity. So doubts regarding the integrity of the management. And he is having doubts regarding the integrity of the management. Then he thinks that when I will go for the review, I think that all the information which is required will not be available, or if it is available, it will not be reliable. So the information which is going to be provided to me by the management for conducting the review, it's going to be unavailable or it is going to be unreliable. So doesn't make sense, so that's why I don't want to go. Where you don't want to go? For doing the review. Understand? Or the practitioner thinks that there could be a limitation on scope imposed by the management. Okay, any god, okay, all possible gods from the world, any god you pray into the exam hall. When you see this question in the exam, say question number 1C, I hope my words turn out to be true. Okay, say in November 17 it comes in question number 1C, and if you don't know these points and you fill up the page with your own points, then you will get half mark or 1 mark, and that will also out of charity. Okay, just because you spent 1 page of ink, they give you that mark. You understand? And then see if you get 1 mark, 1.5 mark, 2 mark, 3 marks. So you know 3 marks, so too much. Okay, 2 marks or something, 1.5. So in question number 1 only you get 5 or 6 marks out of 16. You might have seen your papers, no? You might have called back. I know you do that. You have to do that, okay? You have to do the SWOT analysis. Okay, but then you get 5 marks out of 16. Then in ethics you get, say, 8 out of 16. Then question number 7, I better don't talk about it. You know, at least, you know, when you start looking at the answer sheet, first few pages are filled up, you know. It's written up to here. You look at the 20th, 24th sheet, and 36 pages, no, in your answer booklet. 32, 36, whatever it is. Okay, 2 lines. Then rest is khali. Then after that, again, next 1 line written, rest is khali. After that, next page, 3-4 lines written, done. Matlab pura, it's, you know, law of diminishing marginal utility. It keeps on shrinking, you know, it's like normal distribution curve is not there only in the paper. Okay, so anyways, what I want to tell you, okay, we can't, no, it should not happen, कि अरे यार ये तो RTP में भी आया था number 17 में 18 को पढ़ते वक्त फिर देखोगे. ऐसा मुझे नहीं चाहिए आपके साथ होते हुए. See, I'm not being harsh, but I'm just being factual. Okay, so don't learn out of experiences. You've already taken a lot of experiences. Don't build experiences now. Okay, so you better study this particular question and go. What does it say? Considerations while accepting a review engagement. He says, मुझे तो समझ में ही नहीं आ रहा है ये लोग क्यों बना रहे हैं? Why are they getting review done? Why are they appointing us to get a review done? Right, it is not appropriate. इनके केस में ये सही नहीं है. He says, I cannot comply with the ethical requirements, including independence. Practitioner says, I have doubts regarding integrity of management. I think information will be unavailable, unreliable, or there might be a limitation on scope. Okay, so we can quickly go to the RTP number 17, where I can show you the question and the answer. Okay, yeah, question number 1C. Yes, the practitioner's consideration, yes, of engagement, acceptance, continuance, and ethical requirements, including independence, occurs throughout the engagement. With reference to SRE 2400, state the circumstances when the practitioner shall not accept a review engagement. Are you all there? Shall not accept a review engagement. And then if you come to the answer, yes, what does it say? He is not satisfied. Okay, there is the rational purpose, it would be appropriate. Not satisfied that he can comply with the ethical requirements, including independence. That information would be unavailable or unreliable. Doubts regarding management integrity, or they could impose a limitation on the scope of the practitioner's work. Right, so that is SRE 2400, yes, where we discuss the acceptance. Then we have another standard for which the opening ceremony is awaited in the exam, SAE 3420. Assurance engagement to report on the compilation of pro forma financial information included in the prospectus. Assurance engagements to report on the compilation of pro forma financial information included in the prospectus. Yes, assurance engagements to report on the compilation of pro forma financial information included in the prospectus. Right, so say company A has acquired company B in December 2017. So when did they acquire? 2017. But when was the agreement entered to acquire company B? Say in Jan 17. So when did they actually acquire? December. But when was the decision taken? Jan 2017. So now March 17, company will close its books of account. March 17, will the company A close its books? Yes. Will company B ka amalgamation be taken into effect while closing on 31st of March? No, because it is going to be acquired on in December 2017. But you know, had it been acquired on an earlier date, so actually we acquired in December, but had we acquired it in March, how our financial position would look like is pro forma financial information. So it's like actually you clear in November, but had you cleared in May, how life would have been different? That is pro forma financial information. Exactly that is what it is. And a pro forma financial information. You understand? So now, what is the formula for pro forma financial information? It says unadjusted financial information. Matlab company A financial statements without giving effect to that acquisition in my example. Plus the pro forma adjustment. What is pro forma adjustment? The event or transaction which actually has taken place on a later date, but had it been taken place at an earlier date, is equal to pro forma financial information. So it's like, you know, line by line addition. Say company A ka assets are 1000 crore. This company B which they are going to acquire, their assets are of 280 crore, example. So, you know, had we acquired it on 31st of March, our assets would have been reflected at 1280 crore. So like what you do in consolidation, na, line by line addition of holding and subsidiaries, similar thing over here. And that is pro forma financial information. Okay, so now, yes, whenever we talk about the term pro forma financial information, the first term coming to your mind has to be applicable criteria. Very, 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 very important term. What is applicable criteria? The criteria which is to be applied, the event or transaction, yes, which is to be given effect to while preparing the pro forma financial information. Whose responsibility to compile the pro forma financial information? The management's responsibility. But for 3420, the management is referred to as the responsible party. So as an auditor, what is the objective of the auditor? To obtain a reasonable assurance. What? That the pro forma financial information has been compiled by the responsible party in accordance with the where AFRF came, in accordance with the applicable criteria. Yes, please repeat this sentence 3 times with me. What is the objective of the auditor? To obtain a reasonable assurance that pro forma financial information has been compiled by the responsible party in accordance with the applicable criteria. Pro forma reasonable assurance that pro forma financial information has been compiled by the responsible party in accordance with the applicable criteria. What is the objective of the auditor? To obtain a reasonable assurance that pro forma financial information has been compiled by the responsible party in accordance with the applicable criteria. Now in this standard, I am going to discuss 3 questions with you. Acceptance, agreement and procedures. Acceptance, agreement and procedures. Acceptance question is seen in your RTP May 2017. Agreement question is seen in your RTP November 2017. And what I expect from ICAI is that they will not ask acceptance, they will not ask agreement, they will directly ask you procedures in the exam. Understand, like what they asked for 810, no? Procedures for an engagement to report on summary financial statements. Okay, so now acceptance. Okay, these all three questions are very important. It's like, 3420 sunrise. And a new thing. So we opening ceremony awaited into the exams. Maybe you are going to go for the ribbon cutting ceremony. Of 3420. Okay, in the exams. And opening ceremony is always in question number 1. Okay, right. So now acceptance. So client ka phone aaya. Okay, so client is saying किसी pro forma financial information बनाया है, prospectus में डालना है, तो उस पे ना we wanted your report, compilation, the report, your reasonable assurance for the same. तो CA says okay, I'll come. Then the moment he keeps the client phone, पहले Google करके देखता है कि pro forma financial information है क्या? He doesn't know. So, I'll come. He says, अच्छा है ना, कुछ कमाई हो जाएगा. तो he says yes. So one, अरे कहाँ निकले तुम, है ना? हाँ बोल दिया. Do you have the competence and do you have the capability? Do you have the competence? Do you have the capability? Yes, do you have the competence? Do you have the capability? Then what was the main precondition of 210? Engagement letter, acceptability of the AFRF. Now here it is going to be that whether the applicable criteria, is it suitable? The applicable criteria, is it suitable? Then the wording of his opinion. I just discussed 3 times, we said that sentence, no? The wording of his opinion, whether it has been compiled. Reasonable assurance. So the wording of his opinion. Then the unadjusted financial information has been audited or reviewed, or it has been never been audited or reviewed. And second, third, the event or transaction again has been never been audited or reviewed. A and R over there is audited or reviewed. So if unadjusted financial information has been audited or reviewed, you need to check the audit report whether there is any modified opinion, emphasis of matter or other matter. Never been audited or reviewed, then understand the entity's accounting principles and practices. And again, if the event or transaction has never been audited or reviewed, again understand. Yes, the entity's accounting principles and practices. Right, so what does it say? These are the 6 points. Competence and capability, applicable criteria, is it suitable, wording of opinion. Unadjusted financial information has been audited or reviewed. Unadjusted financial information has never been audited or reviewed, or the event or transaction has never been audited or reviewed. Right, then we come to the agreement. Right, agreement, RTP number 17, this question is there. Okay, so in the agreement 1 it says that all the applicable criteria being used by the responsible party in compiling the pro forma financial information, has it been adequately disclosed? Then compiling the pro forma financial information in accordance with the applicable criteria, whose responsibility? Responsible party's responsibility. And then to provide the auditor with all information, any additional information and unrestricted access. From where have I taken these points? Yes, SA 210, preconditions for an audit, agreeing the terms of audit engagement. And those are the bases. So you need to remember by heart the preconditions of 210, and then you need to keep on customizing for the other standards. There we say preparation, presentation in accordance with AFRF. Here we say compiling in accordance with the applicable criteria. Then all information, additional information and unrestricted access. Okay, so if you come to this 1B answer, है ना? If you see this 1B answer in RTP November 17, है ना? Engagement to report on pro forma. Are you all with me? Right. So before agreeing to accept the engagement, he shall obtain the agreement of the responsible party that it acknowledges and understands its responsibility, adequately disclosing and describing the applicable criteria, compiling the pro forma financial information on the basis of applicable criteria, whose responsibility is responsible party's responsibility. Is that right? And then providing the practitioner with access to all information, additional information, and access to those within the entity from whom he considers it necessary to obtain evidence. Yes, is that okay for everyone? Yes, engagement to report on pro forma financial information. Okay, then I'll discuss the procedures with you now. Okay, what is the formula for pro forma financial information? Unadjusted financial information plus pro forma adjustment, means the event or transaction, is equal to pro forma financial information. So now unadjusted financial information, has it been extracted from an appropriate source? So column 1, 2, 3, no. So column 1 is it taken from an appropriate source. Then pro forma adjustments, are they directly attributable? Pro forma adjustments, are they directly attributable? Are they factually supported? Factually supportable? Yes, कि really are they going to acquire the company in December, और ऐसे ही बस उनको pro forma बना के अच्छा अच्छा दिखाना इसीलिए लिख रहे हैं? They are preparing. And is it consistent with the AFRF? Otherwise, just as for console, line by line addition cannot happen. You have to harmonize in that case. No? So is it consistent with the AFRF? So factually supportable, directly attributable, and consistent with AFRF. And then does it lead to an appropriate presentation of the pro forma financial information? Yes, does it lead to an appropriate presentation of the pro forma financial information? And then it says it is not in conflict with any laws or regulations. And it is also not misleading. It is unlikely to be misleading. Right, so these are the total 5 points in the procedures for an engagement to report on the compilation of pro forma financial information. Whether unadjusted financial information has been extracted from an appropriate source. Then pro forma adjustments, are they directly attributable, factually supported, consistent with the AFRF? Pro forma, does it lead to an appropriate presentation and not in conflict with the laws and regulations, and also that it is not misleading? Because you are putting it in the prospectus, no? So it should not be misleading. Yes, does everybody understand? SAE 3420. 3 questions you have to study. Acceptance, agreement, and the procedures. Yes, acceptance, agreement, and the procedures. And the first word which you need to remember is the applicable criteria. Right, then after that, the last standard which as such I want to discuss is SRS 4410, which is regarding the compilation engagements. Compilation engagements. Yes, compilation engagements, the chartered accountant, he is using his accounting and financial reporting expertise to assist the management in the preparation and presentation of financial statements based on the information provided by the management. So management is saying, see, please compile financial statements for us as per US GAAP. So they will provide the raw data and you will compile, because you know US GAAP, you have the accounting and financial reporting expertise. So here in this standard, I want to discuss with you again the audit procedures. Yani ki not audit procedures, the compilation procedures. Yes, what I want to discuss with you in this standard is the compilation procedures. Yes, the compilation procedures in SRS 24410. Okay, so now First thing, any type of engagement that you need to perform, first you need to understand. Yes, first thing that you need to do even for a compilation engagement is that you need to understand, yes, the entities, what you say, accounting practices and policies. Yes, the entities, accounting principle, yes, practices and policies. Right, so look over here, performing the engagement. Right, so what is part 1 over there? Understand. What do you understand? The business operations, the accounting system, accounting records. Then it says the practitioner shall compile the financial information based on the records, documents, information, explanation and other insignificant judgments provided by the management. So first KOC, then compile. Then it says discuss the significant judgments with the management. And discuss. So first understand, then compile, then discuss and then read. The practitioner shall read the compiled financial information in the light of the practitioner's understanding. So what is the first part of the answer? Understand, compile, discuss, read. And what data will be provided to you by management? Records, documents, explanation, other information and significant judgments. So understand, compile, discuss and read. Then what happened? You think that all this data record which they are providing is incorrect or it is incomplete or it is unsatisfactory. It is incomplete, inaccurate, unsatisfactory. They're not giving you the data which is required for compiling. In that case, you will ask the management to provide you with the corrected information or the additional information. And so this is one question which comes in the exams and the case studies for 4410. And so they are not giving you the information, so you ask for additional information. Still, if they don't give, then withdraw from the engagement. Then withdraw. So what is part 2? Information supplied is incorrect, incomplete, unsatisfactory. Ask for additional corrected information. If they still don't provide, then withdraw. And if the practitioner becomes aware, that they do not describe the AFRF, that there are amendments required to the compiled financial information, he will propose the amendments to the management. So he'll say कि नहीं तुम्हारा depreciation गलत है, तुम्हारा provision का गलत है. So again now he can't make the change without the authority of management. No. So he'll propose the appropriate amendments to the management. If they agree, very good. But again, if they do not agree, do not permit the practitioner to make the proposed amendments, again he may withdraw. And if withdrawal is not permissible, then professional legal responsibilities. And last one, take an acknowledgement from management that they have taken responsibility for the final version of compiled financial information. So generally, I know you ignore the SRE, SAE, SRS series. But right now, I have specifically taken that. SRE 2400, review of historical financial statements, then pro forma, and then this 4410, which is regarding the compilation engagements. Then after that, I come to the NBFC audit report directions. Yes, that's the another amendment in your RTP November 17, which is regarding the NBFC audit report directions. Yes, do you know that? NBFC audit report directions. Okay, which has been divided under 5 parts for me. Yes, which has been divided under 5 parts. Part A of the reporting is for all NBFCs. Part A of the reporting is for all NBFCs. Part B of the reporting is for those NBFCs which are accepting deposits from the public. Deposit accepting NBFCs. Then part C is regarding the not accepting deposits. NBFCs which are not accepting deposits. May 17, they asked a question on this one, no? Matters to be included in the audit report in case of NBFCs not accepting deposits. D is again for all NBFCs but which are not required to hold a certificate of registration. And the last one is regarding the exceptions to the report. Right? The last one is regarding the exceptions to the report. Right. So for all NBFCs, yes, whether they hold a certificate of registration. So if it has been formed in the current year, whether they have obtained a certificate of registration, and if they've registered previously, then whether they continue to hold a certificate of registration. D is when no certificate of registration is required. They've been exempted from obtaining a certificate of registration. So A and D. A, where certificate of registration has been obtained, and now this also corresponds to clause 16 of CARO 2016, registration with RBI, which is again there in your RTP November 17. And now where the company is required to be registered under section 45IA of the RBI Act, whether the registration has been obtained. So again, CARO points very important. You should not only know the reporting requirements, you should also know the audit procedures. है ना कि अभी certificate of registration. So what will you do? One, you will check whether the activities conducted by the company require registration as an NBFC. Then at least 50% of their income is financial income, and at least 50% of their assets are financial assets. Then they've complied with the net owned fund requirement, and then whether they have obtained a certificate of registration. See, that's as a general remark I'm telling you कि कारो के पढ़ाई में क्या गड़बड़ हो रहा है, आप सिर्फ रिपोर्टिंग देखते हो कि हाँ फिक्स्ड एसेट्स में क्या रिपोर्टिंग करना पड़ता है. अभी 1C है ना, टाइटल डीड्स ऑफ इमूवेबल प्रॉपर्टी आर दे हेल्ड इन द नेम ऑफ द कंपनी, बट वो रिपोर्टिंग करने के लिए क्या चेकिंग करना पड़ता है ये आप देखते ही नहीं हो. If you're using the AS Foundation book, there is the clause, there are the reporting, and then there is the explanation, the rightmost column. That you focus more on. The reporting part is going to be there in the question paper itself. From the case study only you will understand, but you have to write in the answer is the procedures. कि जैसे अभी कारो में तो so many new points ना, MNR and PNR, 11, 12, 13, 14, 15, 16, clause 11, 12, 13. 11 is managerial remuneration, 12 is Nidhi company, R is related parties, P is preferential allotment, N is non-cash transactions, and R is registration with RBI. Non-cash transactions, there is also a question in RTP May 17. Okay, so we very much expect again a question in November, and all these are summarized, no? Earlier, was there a clause in CARO regarding managerial remuneration or related parties or non-cash transaction? Never there before. Right? So don't only focus on the reporting when you study CARO, also do the rightmost column which is regarding the procedures. Okay. Now coming to the accepting deposits. Okay. As an auditor in your report, what all do you need to report about in case if the NBFC is a deposit accepting NBFC? सबसे पहली बात कि whether the deposits are within the limits or have they exceeded the limits. Whether the deposits are within the limits or have they exceeded the limits. Then whether they have obtained a credit rating, yes, from an authorized credit rating agency, and whether the credit rating is in force. Then they have fulfilled the requirement of the capital adequacy ratio. Yes, then whether there is any default in the repayment of the deposits, whether they have done the investments in the liquid assets, they have complied with the prudential norms with respect to asset classification, income recognition and provisioning. Then, whether the return on deposits has been filed with the authorities on or before the due date, and the return on prudential norms has been filed on or before the due date. And the last one, the details of any branches opened or closed by the NBFC during the year. Opening or closure of any branches of the NBFCs during the year. Okay, see, I'm telling you, exceptions to the report, they've asked in November 16. Not accepting deposits, I think they've asked 2 times, but they've also asked it in May 17. So what is yet to be asked in the exams is audit report directions in case of NBFCs accepting deposits, and for the fact that it is there in the amendment or the RTP number 17, the full thing. Not only the accepting deposits, all the points are there in the RTP number 17. Okay, then for not accepting deposits, what does it say? Have they passed a board resolution? that this NBFC is not going to accept any deposits during the year. In spite of being a non-deposit accepting NBFC, in spite of passing a board resolution that they will not accept deposits, auditor, you need to report, have they still accepted any deposits during the year? Have they still accepted any deposits during the year? So now if they have accepted, have they complied with the prudential norms? Yes, have they complied with the requirements of the capital adequacy ratio and the capital to risk asset ratio? Yes, capital to risk asset ratio. Right, so quickly we will go through these points in the RTP. Okay, so that you need not write, you may just do the marking in the RTP over there. Okay. Okay, matters to be included in the audit report. Are you all with me? Yes, in the audit report to the board of directors. So 1A point is for all NBFCs certificate of registration, whether they have obtained. Then BA point is for NBFCs which are accepting or holding public deposits. So what is point number 1? I told you that whether the deposits accepted by the NBFC, are they within the limits admissible to the company? Is that okay? Right, then whether the deposits, have they exceeded the limit in excess of the quantum of such deposits permissible. Right, then NBFC, again a credit rating, have they obtained from an approved credit rating agency. Then the capital adequacy ratio. Right, so we said deposits, then we said credit rating and the capital adequacy ratio. So this is also talking about the credit rating and have they exceeded the limit. Then any violation of the NBFC acceptance of public deposit directions. Any default in paying to the depositors. Have they complied with the prudential norms? Are you able to correlate? Defaulted in paying to the depositors, complied with the prudential norms. Then whether the company has complied with the liquid assets requirement. Then have they furnished the return on deposits and the return on prudential norms. Return on deposits and the return on prudential norms, and any opening closure of branches by the NBFCs during the year. Yes, any opening closing of branches by the NBFC during the year. Right, so that is the NBFC audit report directions. Yes, NBFC audit report directions. Then after that we have a small amendment which has come under the fiscal laws. Yes, that is the tax audit. Yes, we have an amendment which is there under the fiscal laws. Okay, so as such, what are the limits, what you say, for a tax audit? 1 crore for assessees in business and 50 lakh for assessees in profession. But if the assessee has availed for the presumptive taxation scheme under section 44AD, then what does it say? The limit for getting a tax audit done, for whether in business or profession, from 1 crore it has been escalated to 2 crore. And that means now you're going to pay tax and deemed profits at a presumptive tax rate. So earlier there was only 1% over there, 8%, only 1% prescribed, that was 8%. But now it says going in line with the less of cash economy, there is 6% for that part where you have accepted the payments through digital means. And for others it continues to be at 8%. Right, so 6% and 8%. So 6% is the new thing over there. Why 6%? For digital means, for account pay check, account pay draft, ECS, all which you've accepted by digital means. Then it says in that case your deemed profit will be say 1.5 crore ka 6% instead of 8%. So that's an incentive for the small traders to accept payments in the digital form, to accept the receipts in the digital form. Yes, does everybody understand that? For the fiscal loss, 6% for the digital means. Okay. Then after that, you have some amendments in the chapter of PSUs, Audit of Public Sector Undertakings. Audit of the Public Sector Undertakings. Right? One, they talk about the elements of PSU audits. Yes, elements of PSU audits. Then they talk about the principles relating to PSU audits. है ना, principles relating to the PSU audits, यानी कि the public sector undertaking audit. And then they are talking about two more audits over there, the financial audit and the compliance audit. Right, the financial audit and this compliance audit. Okay, I always, it's my understanding that these remaining chapters now, apart from bank and apart from standards and ethics and Caro, they play a squirrel role, like, I don't know whether it's relevant for your understanding over here, but when the team was building this pool for crossing the Lanka, okay, there were these monkeys who was carrying those, the Vanar Sena who were carrying those huge rocks. And the squirrel said that I cannot help, I cannot carry such huge rocks. So what the squirrel was doing, it was taking little of mud and it was putting it over there. And that mud was also helping in keeping the stones together. Okay, so these remaining syllables chapters, they are like the squirrel, they also have their own significance, and rather they have more importance. No, because somehow the standards, audit procedures, you know them, but that doesn't mean you're going to get out of marks over there, no. So these also play quite an important role. So elements of PSU audit. The elements of PSU audit, it is divided under three parts. First, TST. One, that is the three parties. Then you have the subject matter, the criteria, and the subject matter information. Subject matter, criteria, and then you have the subject matter information. Yes, the subject matter information, and then you have the types of engagement. Right, then you have the types of engagement. Right, so three parties over here, which are the three parties? One, the auditor. Second, you have is the responsible party. And the last which you have over there is the intended users. Right, and types of engagement, it says it could be a direct reporting engagement, or it could be an attestation engagement. And a direct reporting engagement or an attestation engagement. And for principles, they've been divided under two. One, the general principles, and second, those directly relating to the audit. Right, under audit, very easy, planning, procedures and reporting. Planning, performing and reporting. Conclusion, concluding the audit. Right, and under general, you have 8 points over there. You have sets of two over there. One, ethics and independence. Right, second, professional skepticism, professional judgment and due care. Professional judgment and due care. So ethics and independence, then professional skepticism, professional judgment, and then you have the due care over there. Okay, then after that you have the quality control, SQC1. Yes, you have the quality control. And after quality control, which is the next one over there, the audit team management and the skill. Then next two over there is audit risk and materiality. Audit risk and materiality. And then last two are communication and documentation. Yes, the communication and the documentation. Right. Right, so these are the general principles relating to PSU audit, and then you have the specific audit principles. Okay, so what is it? First, you should not confuse between elements and principles. That is my first concern. Okay, elements of PSU audit, it says the parties. the subject matter and the type of engagement. Right? And under principles, you have the general principles and you have the principles related to the audit process. Okay, if you can just come to the RTP again. Yes, number 17. Yes, audit of PSUs. What does it say? The elements of PSU audits. Right, so TST. है ना? 3 parties, subject matter criteria and subject matter information and the types of engagement. Right, so who is the auditor over here? The Supreme Audit Institution, that is SAI, which is CNAG, the Comptroller and Auditor General of India. Right, then the responsible party and then the intended users. Right, subject matter criteria, so this is more of a performance audit, wherein you evaluate the information activity of the government against a particular criteria. And attestation engagement is more of the true and fair. And direct reporting will be more of your financial compliance audit or the performance auditing. Right, and then after this 3 points, elements of PSU audit, what is the next one which you have over there? Yes, the principles. Yes, the principles of PSU audits. And how are the principles divided? General principles and the principles related to the audit process. General principles, what did we do? We made sets of 4 sets. Right? Ethics and independence, professional judgment, due care and skepticism, quality control, management team and management skill, audit risk materiality, documentation and communication. And audit process, planning, conducting and reporting and follow-up. Right, and then you have the financial audit. You might be knowing that financial audit express an opinion on the financial statements to enhance the degree of confidence of the users of financial statements. Then you know that to prepare the financial statements in accordance with the AFRF and then to report on the true and fair view. Yes, whether the financial statements are prepared in accordance with the AFRF and then to express an opinion on the true and fair view. Right, so that is financial audit. And compliance audit. See, compliance means something law, regulation, complied type of, no. So it says whether the independent assessment of whether they are in compliance with the, in compliance with the various laws as defined as the criteria. Right, so that has been divided under 2, regularity audit and the propriety audit. Propriety is always got to do with unavoidable, wasteful expenditure, expenditure which you could have avoided. So it says sound financial management and ethical conduct, and regularity, laws, regulations, agreements have been complied. Right, and it could be in relation with the audit of financial statements separately or in combination with performance audit. Right, so in PSU chapter, what are the 4 new things which have come over there? Elements of PSU audit, then the general principles, and this general principles and the principles related to audit process, and then you have the financial audit and the compliance audit. Okay. Then after that, okay, I just finished with tax audit, but quickly I just want to revise with you a few important, clauses of Form 3CD. I just want to tell you a few important ones. Okay, so you have Form 3CD. Yes, in which there are in total 41 clauses. I don't know whether you've seen those or how many you have seen. Okay, but clause 4 over there is regarding indirect tax and the registration number. Whether the assessee is liable to pay any indirect taxes and the registration number. Okay, that is clause 4. Then you have 37, 38, 39 and 41. Clause number I'm talking about out of the 41 clauses. 37 is regarding cost audit. Yes, 38 is regarding the excise audit. And 39 is regarding the service tax audit. Yes, service tax audit. What does it say? Like, let me say for cost audit, whether any cost audit has been carried out during the year, any disagreement or disqualification on any item, value, matter, quantity as may be identified or reported by the cost auditor. What are the wordings over there? It says any disagreement or disqualification on any item, value, matter, quantity as may be identified or reported. Same for excise. Whether any excise audit was carried out during the year, any disqualification or disagreement on any item, value, matter, quantity as may be identified or reported. See, indirect tax registration number, they've already asked a question in the exam. Okay, so that was opening ceremony done. Sunrise, but opening ceremony done. Okay, this cost, excise, service tax, all these three are new, and again no opening ceremony till now. So you know, in your question bank, okay, one of the RTP, not November 17, but before that you have a question of Beam Limited. And so you can study that particular question for that cost audit, clause 37. Then 41, demand raised or refund issued under any tax laws other than the Income Tax Act or the Wealth Tax Act. So the indirect tax laws. So 4, 37, 38, 39, 41. Then clause 17 is very important. What is 17? Where land or building or both have been transferred during the previous year, sold during the previous year at less than government valuation. Right, so again you have a question of NS Enterprises and Gunnaj over there. And all RTP questions. Okay, time does not permit me to take you through those, but at least I'm telling you that you please go through those. Okay, but why I'm telling you? Because no question asked in the exams and new clauses put over there. And land or building or both have been sold at less than government valuation. Then the all-time favorites of the institute over here are 16 and 21. What is 16? Less income, amounts not credited to P&L. Amount not credited to P&L. And 21 is more expenditure, which is regarding the amounts debited to P&L. सबसे ज़्यादा questions case study में अगर आप देखोगे, तो it is from clause 21. Why? Because payments made to political party, payments made to any, what you say, per clubs, for clubs entrance fees and subscription, club services and facilities, then any penalties or fines, then payments without deducting TDS, TDS not deducted, not paid, deducted but not paid. Right, then also amounts, what is over here, payments in excess of 20,000 being made by other than account paid check or account paid draft. Where does the reporting of that come? Under clause 21 of form 3CD. Right, so 16 and 21. So these are like bare minimum of what you need to study. And this at least, like you do these properly, 4, 37, 38, 39, 41, clause 16, 17 and 21. Then coming to ethics. Yes, professional ethics. Yes, what is clause 6, part 1, first schedule? A chartered accountant in practice shall be deemed to be guilty of professional misconduct if he solicits client or professional work directly or indirectly by circular, advertisement, personal communication, interview or by any other means, provided that nothing contained herein shall be construed as preventing or prohibiting a member from applying, requesting, inviting, securing professional work from another CA in practice, or responding to tenders or inquiries issued by various users of professional services from time to time and getting professional work as a consequence. Okay, so now regarding these tenders or inquiries, there was a notification applicable for May 17 only, but no question put in May 17, but November 17 RTP we see a question from there. So let us first understand the tender inquiry ka notification. Are chartered accountants permitted to respond to tenders inquiries? Yes, it is given in the exception to 611. So now first thing, first speed breaker is that whether the tender inquiry is exclusively for chartered accountants or whether it is also open for other professionals along with the chartered accountants. If it is also open for other professionals along with chartered accountants, then CA you can respond to any tender or inquiry. Then CA you can respond to any tender or inquiry. Exclusively for CAs, then one more speed breaker. Whether minimum fees for that particular assignment, have they been prescribed in the tender document itself? Then two possibilities. Yes, minimum fees have been prescribed. No, minimum fees have not been prescribed. Yes, they have been prescribed. Then again, CA, you can respond to the tender or inquiry. No, they have not been prescribed in the tender document itself. No, CA, you cannot respond to the tender or inquiry. Yes, you cannot respond to the tender or inquiry. So is it exclusively for chartered accountants or is it also for other professionals? Other professionals, you can respond to any tender inquiry. It's only for CAs, then check whether the minimum fees have been prescribed in the tender document itself. Yes, then again you can respond. No, then you cannot respond. Right, again come to RTP November 17, the question number 19, it should be something. 19C. Yes, you're all awake, no? Okay. Yes, PK Foundation decided to review its historical financial statements. है ना? RTP number 17, question number 19C. Okay, for this it proposed a tender exclusively for chartered accountants. Oh, that's nice. So I said, na, other professionals exclusively. So exclusively. So left hand side. Yes. To obtain assurance primarily by inquiry and analytical about whether the financial statements as a whole are free from material misstatements. Now, however, the foundation did not prescribe the minimum fee in the tender document. Mr. Sodhi and Company, a CA firm, responded to such tender. So the firm, Sodhi and Company, is going to be guilty of professional misconduct under clause 6, part 1, first schedule. Why? Minimum fee not prescribed. And what did we clearly just study? If it is not prescribed, you cannot respond to the tender or inquiry. Right. Then what is 1011? Charges or offers to charge, accepts or agrees to accept in respect of his professional employment any fees which are based on percentage of profits or which are contingent upon the results of his findings or of such employment except as permitted under the regulations under the Act. So you have the exceptions given under Regulation 192. Right, so percentage contingent basis fees, guilty of professional misconduct under 1011. However, we have the exceptions. What are the exceptions? One, receiver liquidator. Oh, sorry, yes, receiver liquidator. And a receiver liquidator. Can he charge fees on based on percentage of assets realized? Yes. Next one, auditor of a cooperative society. Is percentage basis allowed? Yes. Valuer for direct taxes and duties. Can he charge based on the percentage of the property valued? Yes. Right, so valuer for direct taxes and duties. These three were there originally also. Now there are 5 new additions over there. Now these were again there in May 17 only, but again no question asked so far. So carry forward, brought forward from RTP May 17 to November. Right, so what does it say? For certain management consultancy services, for certain fundraising services, they can charge based on percentage of the funds raised. For certain fundraising services, for debt recovery services. पहले दो में certain word use किया है, फिर उसके बाद directly बोलते हैं for debt recovery services. Then cost optimization based on the percentage of the benefit accrued. Yes, on the percentage of the benefit accrued. And last one, such other service or audit as may be prescribed by the council. Such other service or audit as may be prescribed by the council. Okay, these 5 are new ones over there. What are the new ones? Yes, certain new ones. Certain management consultancy and other services, certain fundraising services, debt recovery services, cost optimization and such other service or audit as may be prescribed by the council. Right, so that is the addition to 1011. Right, then in 1111, what is 1111? Yes, engages in any other business or occupation other than the profession of chartered accountancy unless permitted by the council so to engage, provided that nothing contained herein shall disentitle him from being a director. Okay, so now in 1111, you might be knowing there are two lists, general permission and specific permission. So now, you know, recovery consultant in banking sector is there in the list of general permission. And a recovery consultant in the banking sector is in the list of the general permission. Yes, recovery consultant in the banking sector. Right, recovery consultant in the banking sector is now in the list of the general permission. Okay, what is the exemption from cost audit? Yes, exemption from cost audit. Operating in an SEZ, more than 75% of revenue is coming from exports and foreign exchange, or is engaged in the generation of electricity through a captive generating plant for captive consumption. Okay, so this was the one, recovery consultant in banking sector for which no specific permission from the council would be necessary. It is generally permitted, recovery consultant in the banking sector. Right, this is there in RTP May 17. Recovery consultant in banking sector, what does it say? General permission given. Then one more very important question for your exams is this 140 subsection 5. What is 140 subsection 5? Removal of auditor by tribunal or CG. Removal of auditor by tribunal or CG. See, that 143.12, duty to report fraud to central government, that was also new, but quite a lot it has been asked in the exams. But this one, they are yet to ask it. And removal of auditor by tribunal or CG. How does it start with? The tribunal either suo motu, or on an application received from CG or any person concerned, is satisfied that the auditor of the company has acted in a fraudulent manner or abated or colluded in any fraud by or in relation to the company or its directors or officers, it may by order direct the company to change its auditors. If the application is received from CG and the tribunal is satisfied, then the order has to be passed within 15 days and the another auditor will be appointed by the central government. Such a person against whom the final order of the tribunal has been passed cannot do the audit of any company for a period of 5 years and shall be liable under section 447. And the liability shall be of the firm and every partner of the firm who acted in a fraudulent manner or abated or colluded in the fraud. And what is section 447? What is the punishment over there? Now they have given amount ka demarcation. If it is 10 lakh or 1% of revenue, whichever is low. If it is below this amount, then it says 25 lakh or 5 years of imprisonment or both. Fine up to 25 lakh or 5 years of imprisonment or both. And if it is more than this amount, then at least equal to the amount of fraud, the fine, which may extend to 3 times the amount involved in the fraud. And imprisonment would be minimum 6 months up to 10 years. And if it is in public interest, then the minimum period of imprisonment would be 3 years. Right, so this 10 lakh or 1% of revenue, whichever is less, that is the new thing which has come over there. Just say 143.12 may be aaya na, 1 crore or above. So if the fraud is less than 1 crore, then you only report it to the audit committee, board of directors, as the case may be. Yes, and you put it in the board report. But if it is 1 crore or more, then immediately but not till later you report it to audit committee, board of directors, seek their reply or observation within 45 days, and then with or without reply to the central government within 15 days. And so there also the demarcation of 1 crore has come. So similarly over here, 10 lakh or 1% of revenue. What is it that I was talking about? Section 447. And punishment for fraud. And punishment for fraud. Right. And what is the applicability of CARO 2016 for private limited companies? Only tell me that. Yes, the order shall not apply to a private company which is not a subsidiary or a holding of a public company. So that's a new addition. Private company should not be subsidiary or holding of a public company. Having paid up capital and reserves and surplus not exceeding 1 crore as on the balance sheet date. And total borrowings from banks or financial institutions not exceeding 1 crore during the financial year. And total revenue as disclosed in Schedule 3, including revenue from discontinued operations not exceeding 10 crore during the financial year. So it is 1 crore and 10 crore. And a paid up capital and reserves and surplus 1 crore. Total borrowings 1 crore and total revenue is 10 crore. And CARO reporting does not apply to the audit report on the consolidated financial statements. Okay. Yes, is there any other particular question, chapter, answer which you want me to take right now? Any query which you have? You have to study the content over there. You know, like CRISM, it says control environment. Okay, so what is the attitude of management towards the design of control? How much is the participation of TCWG? What action is taken against unethical behavior? So that is control environment. Then risk assessment, identification, analysis and management of risk has been done. Then whether accordingly the accounting system has been established for information system and communication, and the roles and responsibilities have been communicated. Then the control activities have been defined in order to achieve the control objectives. Right, the roles and responsibilities there, and monitoring to evaluate the operating effectiveness of the controls over a period of time. Right, so if you read the content, you will get the points over there. So that is again an important one, no? Components of internal control system given in SA 315, and that also corresponds to the chapter of bank, wherein they talk about the risk management process in bank. So there also these same 5 components of internal control, CRISM. Control environment, risk assessment, information system and communication, control activities and monitoring. Okay. Yes, anything else which you think I have not covered? Okay, November 17, I understand I have covered all the amendments, but May 17, I have just covered a few. Okay. Yes, anybody, anything? Right, so tenders and documents very important in 611. Okay, so again my concluding remark for you would be that do 1 page of writing practice every day. And that's like the medicine which I prescribe for your audit. Okay, you have to write 1 answer every day. Okay, so every time that you study audit, make it a point that you write each variety ka 1 answer. Tax audit ka ek answer, CARO ka ek answer, ethics ka answer, standards ke alag types ke standards ke few answers. And no, what you say, no compromise, no shortcut, no adjustment in writing the answer. Full-fledged. And if you're not very confident, read the question, read the answer. Then close the book and immediately write down. Because the format of the answer is what you need to work on. Because somehow I know with so much of preparation, say maybe sometimes even for 2 to 3 attempts, you're writing audit, but it is getting stuck at 40, it is getting stuck, 32, 30, it's not going beyond that. So the main problem area is writing. Because say, first attempt which you might have written, that time there might not have been conceptual understanding, you might not have covered the entire syllabus. Then obviously by 2-3 attempts, naturally that is going to be covered. And because abhi ho hi jayega na, abhi pata chalta hai, abhi और time मिलता है, तो last time जो छूट गया तो वो इस time आप करने ही वाले हो. फिर रह क्या जाता है उसके बाद भी is the writing practice, है ना, the case study writing. You have to develop that knack of writing the case study answers. Right, so I wish you all the very best. Thank you so much.